Hey, good morning. Let's go over today's trade plan. So in the overnight session, we got yet another test of that bull bear zone, the 17.5 to 19.5 area, where responsive buyers were still active. At this point, heading into the day, the bias is very neutral because the fact that we even came down yet again for a test tells us that there is some short-term weakness in this market. But now that the market has balanced within Friday's range, I am looking for a directional break, either the upside or the downside. Still favoring the buy side a bit more over here because we're still holding above the 17.5 to 19.5 bull bear zone, but the bias is neutral at this point. If we start getting some heavier selling off the open, this could still break lower, but based on the fact that we're still in an a bigger picture uptrend, the higher odds scenario is still a breakout to the upside. But in order for the upside scenario to get confirmed, we would have to see a breakout above this 27.5 prior VPOC, and then really the key area above is this 29.5 to 31.5 initial resistance, and a breakout above these areas, 27.5 and the initial resistance zone, could get us some directional conviction to the upside, lead to a tag of the naked VPOC at 36, open gap 36.75. So on a breakout above, at the very minimum, we would expect a test of these levels over here, with the potential to even test the naked VPOC at 40 quarter and the 39 to 40 half resistance zone, where we can again get some profit taking and some responsive selling. In the event of a downside move and a break below 17.5 to 19.5, very high odds that we'll at least test 13 to 15, and if the internals are not extremely bearish, then we could still get a bounce at the 13 to 15 area. There's a important HVN at 14.5 within this zone, so we could still get a bounce over here. And if we reject initial support and then start trading above the bull bear zone yet again, then we would still have to favor the buy side. It would just tell us that this tested below ended up being a fake breakdown and then a reversal back up. So in the event that this zone holds and then we get back above the bull bear zone, it could still get us some upside directional conviction. In the event of a break below 13 to 15, we would be looking at a test of 06.75 to 09 quarter. That's the bottom of the previous very short-term balance that the market developed before we broke out, and then we can still get responsive buyers active at this support zone below, and potentially the naked VPOC at 04.75. But ideally, this zone holds, and then we rotate back up towards 13 to 15 and 17.5 to 19.5. Then we might kind of just range, between this 06.75 support and the 17.5 to 19.5 bull bear zone. And at that point, there would be, a bit more momentum on the sell side anyway. So we'll just be more careful on fading any breakdown of 17.5 to 19.5, and potentially even getting on board short if the momentum is good enough, and trying to at least ride it down to 13 to 15, and then if the momentum is really good, potentially even down towards the bottom of the previous balance at 06.75 to 09 quarter. But as long as we hold the bull bear zone, this market still has potential to head higher. This area has been tested and rejected multiple times now, so the market has had sufficient time to balance within this range, and at this point we're looking for a directional move, right? Whether it be to the upside or downside, we're looking for a extended directional move outside of this range, and that's why fading a price move outside of this range is risky as well, right? So if we break lower, we do have to be careful on taking any long setups, because we would be fading essentially a 3-day balance. And if we get an upside break, again, we don't want to look for short setups too soon. We want to go with the flow, with the momentum, until the market hits a important resistance area or a stopping point, which in this case is really closer to 39 to 40 half, and that's where we definitely want to look to take profit on longs. And then after that, if the market is fairly balanced, perhaps look for some short setups as well. So those are the main ideas heading into the open. Looking at the other markets, NQ has held up okay so far, but continues to put in a pretty similar theme to the S&P. On the upside in NQ, trading above 37.68 to 37.73 would tell us that the buyers are back in this market. So that's essentially the equivalent of like the 29.5 to 31.5 in ES, and in TF, a breakout above 59 to 60 would tell us that there's some better buying coming in. So keep an eye on TF 59 to 61.5. That's a key zone in that market, and if we can break out above there, then again we can get some directional conviction and perhaps go back up towards the 1169 and potentially even back up towards the highs. So those are the main ideas, the main thoughts. Let's see how well the buyers are able to hold it up this morning, and we'll take it from there.